Joseph Hogue here with the Let's Talk Money YouTube channel. I want to send a shout out to all our subscribers. Thank you for spending a part of your day here with me. I'm excited for this video we've got planned today. It's one of my favorite investing themes and a great plan for consistent cash flow from your investments. You know, few investing themes are as popular as dividend investing, and there's good reason for that. Dividend stocks offer some of the best returns and a solid source of income. Over nearly 4 decades, dividend stocks have easily beaten the rest of the market on returns. Companies that consistently increased their payouts gave investors a 9% total return, and even companies that weren't able to so consistently increase those dividend payments grew at more than 7% a year. Now that's compared to a total return of less than 2% on shares of companies that paid no dividends. Now there are a few reasons why dividend stocks are going to outperform, but I want to get to our topic, and that's how to create a stream of monthly cash flow from your dividends. So most companies pay their dividends 4 times a year on a pretty consistent basis every 3 months. Investors come to expect that dividend is in a certain month, so companies generally keep to that schedule. Now there are some companies that pay dividends every month, but these tend to be from a very specific industry called business development corporations, or BDCs. I'm not a big fan of these BDCs. There are some good companies, but they tend to pay out everything in dividends and they have to rely a lot on debt and other funding to grow the business. That means those dividend payments are really volatile, can go up and down every month. So what we're looking for is companies that pay consistent dividends you can rely on for every month of the year. So for most companies, you've got that 3-month dividend payment, which makes it difficult to get that consistent cash flow every month. But by being strategic about the stocks you buy, you can build a portfolio of monthly cash flow with just a few stocks. Now I'm going to share my favorite dividend stocks for monthly cash flow. 3 stocks and 1 dividend fund that are going to balance solid income and upside price appreciation. These don't have to be the only investments in your portfolio, but it's a great start to an income investing plan. The first here is the iShares Select Dividend ETF. Now that's ticker DVY. Now this is a fund that holds shares in 97 dividend paying companies and pays a 3.3% dividend in March, June, September, and December. Starting your dividend portfolio with this fund gives you an instant diversification and is going to smooth out the ups and downs from the other stocks you buy. As a dividend fund, the ETF is naturally overweight in those typical dividend paying sectors like utilities, consumer goods, and financials. Now, companies in these sectors are like cash machines that pay investors to own the shares, but growth may not be as easy to find as you find in other sectors like tech and energy. So what we're going to do is balance out this dividend fund with a few other stocks in other sectors to give you a little bit more growth as well as cash flow. The dividend fund trades for about 18.6 times trailing earnings, so that's a little cheaper than the rest of the market, and it's provided a strong 15% annual return over the last 5 years. First on our list of individual dividend stocks is General Electric. Now that's ticker GE. Now you're going to think I'm crazy to start with a stock that has fallen 53% from the beginning of 2017. But GE is a solid company and there's a huge price upside for investors coming in at this point. Now management has started talking about selling parts of the company or even breaking off some of the segments. Something that would have been unthinkable just a few years ago, but also something that could unlock a lot of value for investors. Just the breakup value of GE is easily around $21 or $22 a share by my analysis, and that's almost 50% higher than the current price. Now GE cut its dividend in half last year to protect cash flow, but that dividend payment is hugely important for this 126-year-old company, and they're going to be boosting it back up as soon as possible. Even after that dividend cut though, the stock pays a 3.2% dividend yield, and that doubles when the company gets back on track. So shares of GE trade for about 1.7 times book value, which is about a 30% discount to its 5-year average. I've got the fair value of the shares between $19.50 and $23 per share, based on cash flow and earnings. GE pays its dividend in February, June, September, and December, and could be the best investment you make over the next 5 years. The second stock in our monthly dividend portfolio is AT&T, ticker symbol T, and one of the strongest names in telecom. AT&T is just a few years into its DirecTV acquisition, and it's trying to close its merger with Time Warner. Now, these mergers are going to give it a huge advantage in cross-selling services and lowering costs. In the short term, I'm looking at the entire telecom sector to be a huge beneficiary of these new tax cuts. Taxes for telecom companies were among the highest because it's almost entirely US-focused business. It's a business that costs billions a year in capital spending, which is now immediately deductible, and that's going to save these companies millions in taxes. So AT&T is expected to grow its earnings by 14% in 2018, and that's huge for an old telecom company. Of course, one of the biggest reasons to love AT&T shares is that 5.5% dividend yield. Now that's paid in January, April, July, and October. Shares trade for just 12 times earnings, so that's less than half the price of the overall stock market. So this is one value stock you really don't want to miss. Finally, in our dividend portfolio is Exxon Mobil with a 4.1% dividend yield paid out in February, May, August, and November. Now, investors were disappointed in Exxon's recent earnings report, and the shares are down almost 15% in less than a month. But the weakness in the earnings was all one-time charges and compared to last year when the company sold some of its assets. So investors aren't seeing the bigger picture, and that could mean easy gains for new investors. Exxon is not only a strong dividend stock, but the company also buys back billions of its own shares every year, which increases its earnings per share and is like another cash payment for investors. Now, OPEC started cutting its own oil production a couple of years ago to support oil prices, and it's all going to the U.S. producers, and none are as strong as Exxon. The company books nearly half its production from long-life wells, which means it doesn't have to reinvest as much money and can send that back to the shareholders. Energy is also going to be a major beneficiary of that deregulation push and those new tax cuts. Hell, the former CEO of Exxon is now our Secretary of State, so do you think they're not going to do well? Just these 3 dividend stocks and that fund gives us an average dividend yield of 4% if you spread your money evenly over each. You get diversification in nearly 100 dividend-paying companies and cash payments every month of the year. On a $100,000 stock portfolio, you're going to average $335 a month plus price appreciation that could hit double digits in each of these names. The dividends alone aren't going to make you rich, but these companies hold enough back for growth to grow those earnings and send those share prices higher as well. So a 12% annual total return, including those dividends, is going to triple your money in just 10 years and increase it 10 times over the next 2 decades. If you don't need that monthly cash flow, then reinvest these dividends into the stocks to make more money on that money. If you do need a monthly cash flow to pay expenses, then this portfolio is going to provide a few $100s a month to supplement your other income, and you'll see your nest egg grow from that price appreciation. Dividend stocks are a great way to balance current income with future earnings, and this portfolio is an easy way to get started on that. So we're here every Monday and Wednesday with a new video on beating debt, making more money, and making your money work for you. So click subscribe to the channel. It's free and you'll never miss a single video. If you've got a money question, subscribe to the channel and go to mystockmarketbasics.com/ask and I'll answer it in a future video. Be sure to leave any questions or comments in the comment section below the video. Join us on Facebook to get involved in that conversation, and here's to your financial future.